Welcome in. I'm Rhonda Holt, the Loan Maven with Thrive Mortgage. We're going to talk about things that you may need as you're applying for a loan. We're going to talk about income specifically. Income ranges so differently as far as what you do, how a person gets paid, or how they earn income, or how they make a living, or however you want to call it. And it doesn't really matter how, how we're using income. It really doesn't matter as long as we can verify it. That's the big thing to remember. I just had a recent situation that happened, and the client gets paid under the table, meaning get paid cash, and they do not get a pay stub, they do not get a W-2. At the end of the week or work week or whatever, the boss just says, here's your money for the week, and that's great. Money's not taken out, taxes is not taken out, of course. But the problem with that, it's all fine and dandy until you need to apply for a loan.
You need it documented.
And I need to document it because we can't document it. It's not guaranteed funds, and it's not likely to continue because there's not any written agreement on that. But there are different ways. Multiple things that we look at is, for example, if you are a W-2 employee, and I ask these things up front, if you're salary, if you're an hourly employee, then you're going to have pay stubs and you're going to have W-2s. You're not going to need tax returns in those situations. You're only going to need that W-2 form that you get the beginning of the following year, of the year you worked. And I need 2 most recent years of that. And you're going to need 30 days worth of pay stubs, 30 days of most recent pay stubs. Because what I want to look at, I want to be able to verify that if you say that you get paid $20 an hour and you're working 40 hours a week, I want to make sure that you are getting paid $20 an hour and working 40 hours a week consistently. Because most hourly employees, there are times where I look at pay stubs and I notice that they may work 36 hours one week, 38 hours another week, and not work a consistent 40. So then I'm going to do an average calculation to determine what they qualify for as far as a mortgage. So I'm going to use those actual numbers. So I'm not just asking you to make you mad or
to be nosy.
I need those to be able to calculate your income and as far as what you may qualify for. That's one of the things that I look at. Another way that people do get paid, we also look at fixed income. We have people that live on fixed income. You may have Social Security. You may have pension. You may have a VA disability pension. Those types of fixed incomes we do verify by getting an award letter. And every year, especially when you're Social Security, every year, usually in January, February, you're going to obtain, or you're going to get in the mail an award letter that's going to say, have your name on it, and it's going to say this year, basically, Social Security Administration is going to give you X amount of dollars. It's going to have a gross amount, and it's usually going to have amounts that are taken out for deductions for, say, Part B, insurance, things like that. I want to know what that gross number is because I can qualify you on gross figures, and that goes for pay stubs too. I don't look at after-tax dollars. I look at before taxes are taken out. So that's a plus. We want to give you credit for every dollar that you earn or that you receive. So I'm going to look at gross numbers. So that award letter is important to me. And I ask folks, if you did not keep your award letter, because you get it, if you shred it or throw it away or whatever it is, then you're going to have to go by the Social Security office and get one because we need that. That's so important. If I also use, if you say, well, that's deposited to my checking account every month. Well, that may be an after deduction amount that's put in the checking. So it's not going to be a true figure of what you actually get. I'm going to need 2 months worth of bank statements, but I'm going to want to look at those actual award letters for like Social Security, pension. You may get also a 1099. Those 1099s are related to fixed income. You get those at the end of every year, or I should say the January following that year, February, and it would show you what you earned for the year on Social Security or pension, whichever, or both. And I would need those to, another way I can match it up as well, as far as what you're getting gross. If you are self-employed, that is a whole nother avenue. And with a self-employed borrower, and we're going to talk about this later in the show, with self-employment, we're going to look at tax returns. So depending on what tax return or what type of self-employed borrower you are, say for example, if you're a LLC, if you're a sole proprietor, if you're a corporation or whatever it may be, we need 2 years full tax returns, all pages, everything, including schedules. Don't just send me the first 2 pages of that tax return, because that doesn't do me any good. I can't do anything with that because there's so much that goes into those first 2 pages, and I have to analyze that.
Mm-hmm.
So if you have, say you're not a sole proprietorship, so you file a separate business return, I'm not only going to need the personal returns for the first 2 years, but I'm going to need the business as well for the last 2 years of 20, like right now I would need 22 and 21. Now, going over to some of the other types of income that I've seen. We have dividend income. Dividend income is where, you have like stocks, bonds, mutual funds, especially stocks, you're getting some type of dividend from.
Mm-hmm.
And just keep in mind, the income must be regular, and it must show a 2-year history of receiving that income. So I have to show where you've at least been getting it. There are some exceptions to that rule. I've seen as low as 12 months in some cases, but depending on the program. But I would say that we're going to have to look back, 24 months to see that you've been getting it. We're going to look at bank statements. We'll probably get a statement, a summary or something from the company that you have those stocks with to show that you've been getting those. And that has to be a regular amount, with the dividend income that's been coming in. And if it's like different every single month for the last 24 months, we're probably going to use an average of that to see what the average would be that you're getting to be able to use that income to qualify. Retirement income, there are folks that receive like a set amount from retirement. Like, unlike pension, they might have like a past 401k or something where they're getting, or they have to take automatic distributions from. Once you get 70 and a half, you have to take that.
Mm-hmm.
So they may be getting, say, $500 a month from that old 401k account or whatever it may be. And we've got to have not only a statement of the account, but we've also got to show, that they've been getting that retirement income. And honestly, that can just be started up. It doesn't have to be something that you've had for a long time, as long as we can prove that it's going to continue at least 3 years. That's the 3-year normal rate is what it is. And if we've got, let's just say, I'll give you an example. Let's just say Mary has $10,000 in her retirement account and she's getting $1,000 a month. Well, let's see, 3 years, 30, that's 36 months. Yeah, that's $36,000. Mm-hmm. So guess what? That's probably going to run out before 3 years. Mm-hmm. So, and it's going to run out probably less than a year. So that wouldn't qualify. You've got to have enough money, obviously, to continue you for at least 3 years. Right. Most people do anyway. So that's not an issue. And then also alimony or child support. I've seen this. I'll have people that say, I receive, or put on their application, I receive alimony, I receive child support. Well, it does have to be court ordered, and we have to have a copy of the divorce decree and any other court records that say that you're going to get it. We talked about getting into alimony and child support. I just wanted to kind of talk about that. You do have to, if you claim that, it has to be court ordered. I'm going to want to look at a divorce decree and a court order document showing that. But the biggest thing for any of that, whether it be this or say dividend income or something like that, it has to continue for at least 3 years. So we want to make sure that in a child support situation, we're going to look at those documents. If you have a, say, 17-year-old and you're getting child support for that 17-year-old, well, we know that that's not going to continue for 3 years. Does that make sense?
Mm-hmm.
So it has to continue. Now, if for some reason it says on the document continue to their 21, then yeah, we've got to see that. But that's very rare. I have seen it before. But alimony the same way. It's got to continue. Does it, have a stipulation there that it cuts off at a certain time, whatever. But you have to show past child support payments, for example, in the last 6 to 12 months. So I ask for something that shows like a transaction history on your account that shows you've been getting that amount. If you're supposed to get paid $500 a month, it's $500 that you've been getting for the last 6 months.
Mm-hmm.
I have situations where clients tell me, unfortunately, that they're supposed to be paid child support, but they don't get it. Well, we can't include it if you really don't get it regularly. If they pay you when they feel like it kind of thing, you can't include it.
Mm-hmm.
Just keep in mind, if we can't verify it, we said this in the beginning, we can't include it. And if you can't verify it, it's really not there. And if you get paid under the table, it's really not there. On to talking about self-employed borrowers. We were talking about that earlier. When I do an analysis of the self-employed borrowers, I will look at personal and or business tax returns, all of them if they have both. And I look at everything. I look at all pages. I even can use rental income. I have many clients that have several rental properties, and I will look at their tax returns for the last couple of years to determine what that income looks like. And I am able to add back some items or subtract out some things, some expenses. But if you are a self-employed borrower, I will say, that's been in business over a couple years, you've been filing taxes, and you write everything off, well, guess what? You're not going to be able to qualify necessarily on a traditional loan. I do have a non-qualified mortgage type of deal that we'll talk about on another show. But as far as a traditional mortgage product, if you write off everything being self-employed, we will not be able to probably qualify you on that income. We'd have to go a different route, totally. Now, also I'm going to ask for a profit and loss for that self-employed borrower, because not only do I want to make sure that they, yes, have been profitable for the last 2 years and not written everything off, but they are profitable to date. So I'm going to want to see the expenses and income to date on that particular business, because I want to make sure that they're still profitable. So I'm going to look at all of that and make an informed decision to say that yes, they qualify. If you had a business loss, that counts against you, unfortunately. I do have most of the situations, I'd say 90% of the situations that I've got, you do have to be in business for at least 2 full tax years. If you've only been in business 1, it's going to be a situation where we may not be able to qualify you. We may have to look at other avenues if we can get you qualified in a non-traditional form, but that's basically what we're looking at. Let's say on the self-employed side that you have been a self-employed borrower for more than 5 years. Then I can look at the most recent year's tax returns, especially if it's a good year, because maybe last year, the year before wasn't so great, and this past year was really good.
Mm-hmm.
Then I can use that if you've been in business for longer than 5 years. So all that stuff plays a part. So it's a lot that goes into it. I think the most important thing that to remember is, and that goes for freelancers too, you know, I say self-employed, freelancers, you know, whatever you want to call it, you just, you know, if you are in business for yourself, you've got to make sure that you are claiming income. And I even have borrowers that want to think about buying, and they are self-employed and they want to continue to be self-employed, but we'll coach them around, okay, well, if you're going to do this, then you're going to need to start claiming some income. You might have to pay some income taxes.
Mm-hmm.
You know, I would talk to your tax accountant about it to see what the best route for you to go. And if you aren't able to make that happen and showing the income, then we can look at a non-traditional route. So to see if you qualify that way. But the biggest thing that we look at as far as getting you pre-approved for a mortgage is the income must be steady. You know, whether it's self-employment, fixed, whatever, it must be steady. And the other thing is it must continue, or if situation where, you know, it's child support or something like that, it must continue for at least 3 years. You know, I know that if you're employed with a particular employer here in town or wherever, we're a at will or whatever you call it state, that means that they could fire you or let you go just at will. I mean, anytime they wanted to. You know, that's just kind of where we are right now. But, you know, and yes, that's not guaranteed, but, you know, the good thing about it is mortgage lenders do consider that stable income as long as it's full time. Now, talking about that, the income does need to be full time income. If you are salaried or if you are an hourly employee, you have to work full time. The only exceptions with that is the fact that you can be part time, but you have to be part time for at least 2 full years previously. So they know that, yes, you've been working that and it's been part-time, it's worked out well. We do an average and that's how we come up with that income to qualify. The other things you want to make sure of is that, you know, we look at your annual income. It must be reliable. We do not look at temp agencies. If you're working for a temporary employer, a temporary job, that's not really considered stable. I've had situations where somebody was in a temp job for several years in the same one, and then we can get some employer letter and do some verification of employment. We have been able to make that work.
Mm-hmm.
But if you just, say you work at a temp job for a year, that's just not going to work. It's not stable. It's not considered expected to last. You must have a steady cash flow. And when we're looking at income, we're going to look at 2 years of history on basically anything. And we've kind of talked about this. So the exceptions that come into play with the 2-year history is the fact that, let's say, Mary, you just graduated college and you were studying to be a nurse.
Mm-hmm.
And you went to nursing school and you really haven't worked. You maybe did some volunteering or you did get your hours in and so forth, but you just really never had a stable, you may have worked at, Burger King, in the summer or something. Right. I don't know. But if you received a job offer, you graduated, you've received a job offer from a hospital or doctor's office for full-time employment, and you have an offer letter, we can use that. And you don't have to be employed for 2 years. So that's where the exception comes in.
Mm-hmm.
Same goes for, teaching. Let's say you went to school for a teacher and you get an offer letter to start teaching this fall at a school. We can use that and you can get a house if you qualify.
And it doesn't have to be like for a contract for a certain amount of time.
Right. It can't be, it can't be a temporary type of contract.
Right.
If it says on it temporary employment, part-time, then no. It has to be, it will say usually on the contract that we see, it will say full-time position, and it'll say your type of position that you've been given, and what your salary is, when your start date is, and it is a continued employment, basically, especially for teachers. We know that the teaching contract only goes from like fall to the spring, and then it usually renews and so forth, but we allow that. And as long as it's full-time, I have even had situations, let's say, where you are a nurse and or let's stick to teachers. We're talking about teachers. Let's say that you're teaching at one school, and this fall you're going to another school and you have another job offer. And let's say here it is July, and you're not going to start until August. Well, guess what? We can go ahead and get you under contract for a new house. We can get you pre-approved based on that new offer letter, and you can move in before you start your job. So that's a real plus for a lot of people. So there are exceptions and things that you can do, especially if you've gone to school for a particular profession, doctor, nurse, lawyer, teacher, and that will count towards the schooling, will count toward that 2-year requirement, because we would just get school transcripts and show that you've been in school for this. But if you go, if you've gone to school for a nurse and then you become a you become a phys ed teacher, I don't know that would work.
Right.
So yeah, you got to it has to kind of flow. So, but yeah, there are many exceptions that can be made on those situations. New house on the block today is at 404 Statford Street in Lynchburg, Virginia, 24501. It's for $209,500. This would be a perfect first-time home for someone that's looking to buy a home. Single family residence. It has about 4,000 square feet. It sounds like a big house. It is being listed by Ann Coleman at Mark Dalton at 434-841-0244. It is a beautiful 1930s bungalow offering a blend of vintage charm. It's a cozy 3-bedroom, 1.5 bath for $209,500. So again, if you are interested in this house, reach out to Ann Coleman at Mark Dalton, and she will be glad to show you the house or get someone to show you the house. But the pictures of it, don't do it justice, I'm sure. It's a really cute house, and for somebody to get into as a first home.
Wonderful. That sounds great.
So I appreciate everyone tuning in this week. We've talked today about income and how we can use different types of income to qualify for a mortgage. And, it can be tricky. That's why we ask for the documents, and that's why we want to make sure that you do qualify. I can be reached by phone again at 434-221-6361. You can also visit my website at theloanmaven.com, and you can apply now, and we can take a look at your application to see if you qualify for your next mortgage. And be sure to tune in next week when we'll talk about all things mortgage. See you then.